Today, the White House unveiling a plan to address supply chain issues and get more truckers on the road. What's in the works? NBA legend Michael Jordan is launching a fan site based on blockchain. How would it work? And central banks rethinking their ultra-easy monetary policies in the face of rising inflation. But some are moving faster than others. That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. The number of import containers processed at the largest U.S. ports plummeted in November. Volumes at the ports of Los Angeles and Long Beach last month were down almost 10% from a year ago. But the number of ships waiting to unload cargo there is still growing. Officials say it's because retailers are now sending smaller ships. It's less efficient for the ports to process many small vessels. That means processing has actually slowed down there. But half of the ships at the LA port last month were small ones. Marine terminal executives say they can't work as fast as they'd like because of shortages of trucking equipment and workers at inland warehouses. The ports are also particularly busy. Despite the November decline, officials say the ports are on track to handle record import volumes this year. And to help with the trucker shortage, the White House today unveiling a plan to recruit and train more drivers. NTD's Olin Richards has more.
The Truck Action Plan is the product of the Biden administration's Supply Chain Disruptions Task Force. It aims to get more truck drivers on the road to address supply chain issues. On Thursday, Transportation Secretary Pete Buttigieg emphasized the important role trucking plays in the U.S. supply chain and economy.
A lot of the issue has to do with trucking capacity in all parts of the country. Remember, these truck drivers are the definition of essential workers. You can't do that job from home. You can't do it over Zoom. And we have absolutely depended on them to get everything from vaccine supplies to Christmas presents where they need to be.
The White House says 72% of goods in America are shipped by truck. And in most communities, trucks are the only form of delivery. The American Trucking Association says the industry is short 80,000 drivers, which is a record high. If nothing is done, it could grow to 160,000 by 2030.
So we're teaming up with the Department of Labor, taking a number of steps across the next 30, 60, 90 days and beyond. In the near term, a lot of it's about taking down some of the red tape that gets in the way of people who want a career in trucking, being able to get tested for a commercial driver's license, for example.
The plan will provide over $30 million to help states expedite commercial driver's licenses. Working closely with the private sector, the administration will launch a 90-day apprenticeship challenge to recruit as many employees as possible, offering paid on-the-job learning with registered apprenticeships. The plan also establishes a joint initiative between the Departments of Labor and Transportation to recruit new drivers.
That means listening to truckers and what they have to say. We'll be spending more time with them.
Additionally, the plan will reach out to military veterans looking to enter the trucking industry. Arlene Richards, NTD News.
And U.S. industrial production picked up in November, according to new Federal Reserve data. In fact, it's at its highest level since 2019. That's despite ongoing labor and material shortages. Production of construction materials pulling the index higher as IHS Markit reports global manufacturing growth seems to be slowing. The slowdown isn't as evident in America as it is in Europe, where IHS Markit says virus restrictions have been stricter. It found supply chain problems have eased somewhat for producers, but prices for materials remain elevated. So joining us is Dennis Gagnon, CEO of Belt Technologies in Massachusetts. Belt Technologies makes steel belts for robotics and other industries too. Dennis, great to see you again. Thanks for coming on.
Yeah, thank you, Paul. Good to be back with you.
Dennis, we see from today's PMI numbers, it seems to suggest manufacturing activity globally is slowing, but I noticed that new orders in the United States continues to rise. Is that what you're seeing on the ground?
Yeah, absolutely. We're fortunate to be busy and seeing continued high order volume from our customers, certainly. And, you know, carrying on from our last discussion a few months ago, we have, as predicted on the other side, seen it as getting worse from a supply chain standpoint before it's hopefully starting to turn the corner next year.
So you have seen it become worse since we last spoke?
Yes, it's certainly, there hasn't gotten better yet for sure. I think there's certainly, you read about indications where it's coming, but we haven't seen that yet, I would say.
So how's that manifesting? Is it that input prices for raw materials are more expensive, or is there shortages that you're experiencing even?
Yeah, certainly both. I'd say our raw material, stainless steel, is still priced quite a bit, significant double digits more than it was a year ago. Some of our other supplies, corrugated coating costs, we use a lot of Teflon coating. Those materials are substantially more expensive today than they were 6 months or a year ago. And certainly the lead times have not come down yet by any means. So if anything, we are starting to see more delays than we were, even 3 months ago. I think there's indications we might be turning the corner next year, but we certainly have not gotten there yet, at least as far as we've seen here.
Let's take stainless steel as an example. Where could you potentially see some relief in the next 6 months, 12 months? What are you hoping for?
So we ultimately, there is some processing in between the mill and us, essentially slitting to width. But we do, most of our steel does come from U.S. steel mills, but some of the specialty grades does come from Europe. And we have been, at the mercy of the productivity and availability of those mills. So there's been major strikes here in the U.S. as well. It's not just an import thing. So we're still in the mode of trying to beef up stock and grab it when we can get it. And we're subject to, and we're hoping that some of the issues, certainly domestically, will work its way out in the short term. But we have not seen that yet.
Dennis Gagnon, Bell Technologies, appreciate it. Thank you.
Thank you, Paul.
In a market news today, the Nasdaq ended sharply lower. It fell nearly 2.5%, but 385 points. The Dow fell 30 points. S&P 500 lost 41 points, but 0.9% today. And internet giant Reddit announced today it's confidentially filed for an IPO. NTD's Fake Quarter takes a look at the company's background and how it makes money.
Reddit is filing to go public. In a blog post, the company says the number of shares to be offered and the price range for the proposed offering have not yet been determined.
They're coming into a market where investors have become very skeptical of companies that are not profitable. So they will not be very well received, is my take.
Santosh Rao is the head of research at Manhattan Venture Partners. Rao says popularity doesn't matter as much as profitability.
Just kind of keep growing the user base. Right now, it's close to 55 million. I think that's the biggest thing. Drive that. And as the user base grows, they can command more ad rates. The advertisers will pay more.
Reddit is a massive collection of forums founded in 2005 by college friends Alexis Ohanian, who is married to Serena Williams, and Steve Huffman. Reddit has over 100,000 active forums called communities and over 50 billion monthly views. The firm makes most of its money from advertisers. Reddit's investors include Tencent, Sequoia Capital, Fidelity, Tacit Capital, and Vi Capital. Fake Quarter, NTD News.
And basketball legend Michael Jordan is jumping on the blockchain bandwagon. He's launching a fan engagement platform on the Solana blockchain named Air. The platform will feature a token mined on the Solana blockchain. Fans can then use their tokens to join a huddle. It's kind of like an exclusive community where they'll have access to digital assets like non-fungible tokens or NFTs. The project has already raised $10 million, with investors including Reddit co-founder, Chicago Bulls player, and the New York Knicks executive vice president, set to launch in 2022. And House Speaker Nancy Pelosi says members of Congress should not be banned from trading individual stocks. Comes after a Business Insider report claiming that dozens of congressional members have violated laws against insider trading, mostly because they didn't report their trades on time. In light of the report, a reporter asked Pelosi Wednesday whether members of Congress should be barred from stock trades. She said no, because lawmakers should be allowed to take part in the marketplace freely.
This is a free market and people, we're a free market economy. They should be able to participate in that.
A 2012 law requires federal lawmakers to report trades made by themselves, their spouse, or their dependent children, and they have to do it in a timely manner. The Business Insider report alleges 49 members in both chambers and both parties had violated the laws. Speaker Pelosi's name did not appear in the report, but she and her husband have made millions from stock trading since she took office. Pelosi's spokesperson denies any allegations of insider trading. And surging inflation seems to be causing central banks to pivot away from ultra-easy monetary policies, though only along slightly different paths. The Bank of England today became the first major central bank to hike interest rates since the pandemic hit, raising rates by 15 basis points to a modest 0.25%. And yesterday, the Federal Reserve announced it will scale back its economic stimulus faster than planned. It's also projecting 3 interest rate hikes next year, instead of just 1. Meanwhile, the European Central Bank says it's leaving interest rates unchanged, but would end its pandemic emergency asset buying scheme next March as planned. At the same time, though, the ECB is ramping up a separate bond buying program to serve as a bridge as it winds down the pandemic emergency scheme. So joining us is Daniel LaCalle, chief economist with the Tressis Hedge Fund with over $6 billion of assets under management. LaCalle also wrote Escape from the Central Bank Trap. Daniel, great to see you. Thanks for coming on.
Thanks for having me.
Daniel, we see the Bank of England raising rates today. Yesterday, we had the Fed looking to taper and tighten even faster. What are the big changes going to be for the real economy, do you feel?
I don't think that there's going to be a massive impact on the real economy. Remember that when central banks start to raise interest rates, already commercial banks have probably started to raise interest rates for their customers. And we have seen anyhow that in the US, the UK, in the Eurozone, credit demand was slowing down significantly in 2021 and to a normalized level, nothing negative about that. So I think that they're being extremely dovish in this sort of acceleration of tapering anyhow. If we look at what the Fed is saying, interest rates will be in the United States at 2.1% in 2024. So that means very far away from where inflation is.
And how about the financial markets? Are you taking a more defensive position at the hedge fund?
We are looking to have a more defensive position fundamentally because we think that the more cyclical stocks and the more cyclical assets have run their course. So we have taken money out of commodities, out of cyclicals, out of everything that has to be expected to rise significantly because of inflationary pressures or because of more improvements in margins. So more defensive, less exposed to emerging economies, less exposed to the Eurozone, more exposed to the United States, and less exposed to the economic cycle, yes.
Mm-hmm. We see that even the NASDAQ and the tech stocks continue to rally. Are you expecting this to continue?
Well, in the case of the NASDAQ, it's an interesting index because about 90% of its return has been created by 5 stocks, no? And those 5 stocks continue to have very strong fundamentals, and we're living it every day with the use of technology and the use of their applications, no? So I think that that divergence between a few of the stocks and the other components of the index, as well as the NASDAQ versus cyclical and value stocks, I think that will continue, yes.
And say if the Fed, as planned, they reduce and they eliminate their bond purchases by next March, the ECB eliminates their bond purchases by next March, are you expecting the stock market to correct a little bit, or you think we just won't see the levels of growth that we've been used to over the past 18 months?
Well, the first thing that we need to understand is that none of the central banks are going to stop entirely their purchases. They're reducing their purchases. So even in the most, let's say, aggressive estimate of what they will do by March, they will continue to repurchase in the region of 40 to 60 billion a month between the Fed and the ECB. So it's going to continue to be, unfortunately, an environment of financial repression, and that certainly is positive for equities and for risky assets.
Finally, we had Danielle DiMartino-Booth on the show yesterday. She talked about recessionary risks and signals that she's seeing in the economy. Are you worried about a slowdown, possibly recession?
I think that the risk of a slowdown is very evident. We are seeing it, for example, the PMIs in the Eurozone are coming down aggressively, both manufacturing and services. The US economy is a little bit stronger, but there are also warning signs in the manufacturing sector and in the smaller companies. So I'm worried about the slowdown. Absolutely, I am. But I don't think that next year will be a recession. I think it's still difficult, considering that there are strong tailwinds in the economy, but definitely slowing down in job creation, and certainly slowing down because of the elevated levels of debt accumulated throughout these last 5 years.
Interesting. Daniel LaCalle, Tressis, appreciate it. Thank you.
Thank you very much.
With that, we take a quick break, but still to come. A startup announcing a new solar electric car. Find out how much it's expected to cost and when it's coming out. And Sri Lanka unveils a huge sapphire pebble. Could be the largest in the world. That and more coming up on NTD Business.
It's just clear as day. The media, whether it's broadcast, cable, or print media, has become extremely biased. And I started looking online for alternative ways to get information. And I saw an ad for a free trial. And I looked at it and I said, Epoch Times? I mean, come on, this is end of days type of stuff. I mean, what are they going to be talking about here? And I said, well, it's a free trial. Let me dig in. Is it giving me both sides? Is it giving me an objective point of view here? I have looked for opportunities to see where they might be biased, and I don't find it. It has given me a level of trust in media that I didn't think I'd ever get back. I love the Epoch Times because it has renewed my faith in the idea that a reliable, responsible, non-biased source of information is available. And I can say that I love it because of that.
Secure, the true solution for your digital privacy and security. Secure is a private and secure messaging and email solution hosted in Switzerland, using military-grade encryption and Swiss privacy laws, giving you true privacy. Secure is 100% private and does not collect or sell any of your personal data. Secure's Helix technology connects you securely to our Swiss servers without the need of a VPN, guaranteeing privacy and security for all your communications. Secure Messenger doesn't require your phone number or any personal data that hackers target. Chat by Invites allows you to chat privately and securely with anyone outside of your secure network without the need for others to download Secure. Secure Send offers you a private and secure way to email anyone outside of Secure. You won't find this level of privacy or security on any other email or instant messaging application. Visit secure.com. Regain and protect your privacy today.
Welcome back. The pandemic hit the hotel industry hard, but one luxury 5-star hotel in New York City is thriving again. NTD's Phil Zhou takes us to the Langham to see what's behind its success.
We're here in Midtown Manhattan, where to my right is the Empire State Building, to my left is Rockefeller Center. No better place for the holidays. Today we visit one of the most exclusive hotels in New York City, the Langham, right here on 5th Avenue. Let's get started. Part of a skyscraper 60 stories high, the 5-star hotel remained open throughout the pandemic when most hotels decided to shut down. Why did they do it?
It wasn't a question of what could we make. It wasn't profitable. But we reduced the loss, which was significant, obviously.
And that decision paid off. Today, the Langham, New York remains open at full capacity, with many staff returning. General Manager Richard Boussier says one of the secrets is being truthful and sincere to your workers.
Wanting to be able to put hand on heart to you as a colleague that we were rehiring and saying, you know, we can pretty much guarantee you 40 hours of work a week.
And by having a good heart comes good rewards. Today, all 200 plus rooms at the Langham are sold out.
It's pent-up demand for New York, to be very honest. Radio City Music Hall, Christmas Spectacular back this year, which is fantastic. Broadway is open.
Sports and entertainment is back too. As NTD News was filming, the entire Golden State Warriors team started checking out of the hotel. That's after their game with the New York Knicks a few days ago. Security was out and about, fans lining up outside, packing the streets. Boussier says business has been so good at the Langham, the company plans to open 3 to 4 more hotels in the next couple of years. Phil Zhou, NTD News, New York.
And a new Japanese inflatable scooter is designed to help riders get around Tokyo, and it can even fit into a backpack. NTD's Andrew Thomas has the details.
If you need to take a short trip somewhere, but don't have access to a car or public transportation, Japan's Poimo may be your solution. Poimo stands for Portable Inflatable Mobility.
People would imagine balloons to be soft, but this one is like a basketball. Even if people ride on it, it's steady as a rock and sturdy.
The inflatable electric scooter was developed by researchers from Tokyo University as a mobility solution.
I first thought about developing a mobility device that can bridge the last 1 mile, 1.6 kilometers, or distance between a train station and a workplace, where there's some distance but no public transportation.
The scooter runs on an electric motor and can fit easily into a medium-sized backpack in its deflated form.
Safety and operability of vehicles take time to be developed, so to merchandise this scooter as a product, we need to guarantee that it can be ridden safely.
Using an air pump, it takes about 2 minutes to inflate the device into a portable ride. With a single battery charge, the 22-pound scooter can run up to 90 minutes at about 9 miles per hour.
As you can see, Poimo can be built into different shapes. With this, I hope we can make it in the shape each person wants. For example, a shape that is suitable for a person's height so that we can offer the most suitable mobility device for that person.
The research team has also developed a software which allows users to customize the shape of the vehicle, such as a sofa or wheelchair. Andrew Thomas, NTD News.
And a solar electric car is in the works. It's planned to hit the market around $34,000, but they won't start making it until about 2024, still a ways off. The car is called the Lightyear 2. It's a less pricey version of the Lightyear 1, which begins production in 2022. The Lightyear 1 will start at $170,000. Its integrated solar cells help push the range to 450 miles. For comparison, that's about 50 miles more than the range of the Tesla Model S. And a new NASA milestone. says one of its spacecraft flew inside the atmosphere of the sun for the first time this past spring. Data from the flight could help us understand more about the star. NASA's Parker Solar Probe came within 8 million miles of the sun's surface on April 28th. It sampled particles and magnetic fields, with NASA saying touching the very stuff the sun is made of will help scientists uncover critical information about our closest star and its influence on the solar system. Scientists say it's the closest approach ever made toward the sun. The mission could help scientists better understand solar conditions and some other mysteries. And a large gemstone in Sri Lanka is winning awards from the country's Gem and Jewelry Authority. It's said to be the largest natural blue sapphire ever recorded. NTD's Andrew Thomas takes a look.
This large gem was found in Sri Lanka 3 months ago, but it's just being unveiled to the public now, at the home of one of the partners of the gem pit.
I think this may be the world's largest corundum pebble. So there's a good value because of this size.
The natural corundum blue sapphire is said to be the largest ever recorded in the world, weighing it at 683 pounds. Almost 90% of all corundum stones found in the world are from Sri Lanka, renowned for centuries for its unique gemstones. The pebble has been named Queen of Asia. Previously, there was a large star sapphire cluster found weighing over 1,000 pounds. Andrew Thomas, NTD News.
Incredible. That's the latest business updates for today, but you can still catch NTD Evening News with Evelyn Lee. It's at 6:30 p.m. Eastern. For NTD Business, it's all for today. Thank you for watching. We'll see you tomorrow.